Well, today on the Accounting for You podcast, we have a very special guest. We have Dwane Johnson with Hometown Payment Solutions, and we're going to be talking about credit card processing and other payment solutions that he and his business can help you with, and how all that ties into your financial accounting record. Welcome to the Accounting for You podcast, brought to you by the accounting firm of Adkins & Reynolds CPAs. This podcast is designed to provide relevant tax and accounting information to help you and your business succeed. If you enjoy listening in, please like and subscribe to our channel. Now, on to the show. Well, welcome back to the Accounting for You podcast. I am Chris Reynolds, CPA and partner with Adkins & Reynolds CPAs.
And I am Jay Adkins, CPA and partner at Adkins & Reynolds CPAs.
Today we have a very special guest with us. His name is Dwane Johnson. He's with Hometown Payment Solutions, and we're going to be talking today about some credit card processing and other payment solutions designed to help you and your business and its cash flow, and also how that relates into the financial records and us as accountants. And we're obviously very interested in that, and you as the small business owner would be very interested in how that all works with your records. So, Dwane, it's great having you.
Thank you. I appreciate the opportunity to come in and sit on the podcast. I don't get it often that I get to sit in front of a camera and talk with two guys that I'm fun working with and have a relationship with. So I really appreciate the invite.
Absolutely. Sure. Well, tell us a little bit about yourself.
Okay. As I said, my name's Dwane Johnson, and yes, I do get that reference often. I have been called the Rock a couple times, but I kind of have a little tagline on that not nearly as big as you can see, and I don't have his bank account, so I have to go by the pebble. I'm a little smaller than he is. But Hometown Payments is a locally owned company that we work all through the Tri-State Valley, all the way from. We're actually all the way up to Pittsburgh, all the way down to Portsmouth, kind of over to Zanesville, Columbus area, over to Hagerstown, Maryland. So we cover quite a berth. We kind of got our genesis in 19 after my partner, Chris Capel, and I were at a national firm, and they got bought out by a bigger firm, and they started doing a few things that weren't quasi right in our minds, kind of a little bit more worried about Wall Street and earnings, which affected the merchant, our customers, your guys' customers. And that just didn't set well with us. So we kind of started on the path of our own independent firm. And we kind of make the analogy we're like an independent insurance agent. We're not at one of the closed shops where we can only sell one thing. Mm-hmm. We have multiple vendors that we use that give us that opportunity to sit down with a person and say, hey, where's the best fit? Because not every processor likes every type of business.
Yeah.
So in 19, we got together and decided we'd start our company. He left the national firm in June of that year, and I left in July. And kind of as they say, the rest is history. We're 4 years out and growing. We now have got I'll call it 5 reps, 3 full-time, 2 part-time working for us, and continuing to grow there. We just keep adding products. We're hopefully August, September, we're rolling out our V1 of our own point of sale that will be ours that we're going to own. So a lot of exciting things have happened in the last 4 years.
Do you have any prospects or plans to expand outside of your current geographical area?
Yeah, kind of that evolution has started, and right now we're probably our furthest is we've got a rep in Virginia Beach, Richmond, kind of that corridor.
Okay.
And we're actually I'm interviewing a guy in Lexington right now. So our goal has been to kind of keep them close so that we could be a little more hands-on. Our industry's kind of weird in that sense that they'll run an ad in the paper and hire somebody that's never had any sales experience, never done anything, and they really don't train them, kind of throw a little bit of material at them and say, go try. Well, the problem with that is it hurts the merchant more than it helps our industry, because you get a person coming in and it's not their fault. They'll come in and tell a merchant whatever they want to hear, basically. Get them in a contract that's bad, get them set up and they're paying fees on equipment that they shouldn't be paying, those kind of things. And when that happens, it gives the industry a bad rep. So what we decided is we wanted to kind of keep it close that we could touch them, really train them, make sure they're doing the right things, make sure that when they do put a merchant in place, they're going to be able to service them, going to be close enough and hands-on.
Yeah.
So our goal is we started about 3-4 hours away, and we're going to kind of expand that out. Ideally, we'd like to get a couple people 3 hours away and then kind of make them sales managers and let them have a 3 hour window and kind of expand out.
So Hometown Payment Solutions sometime soon coming to a city near you. There
Absolutely.
You go. Very good.
Absolutely.
All right. So what, as a payment solutions company, what in the payment solutions world, we've got credit card processing. What else do we have? I mean, what else do you offer?
Hey, you've got credit card processing, and then we do have ACH, the banking side, doing electronic checks. The neat thing is it's still credit card processing or ACHing. It's just how are you getting it? Is it a terminal on the counter? Is it a point of sale? And when I say point of sale, that's when you go into a restaurant or at Walmart and they've got something that they've scanned an item or they're keying in on the station on the computer that's sitting there. That's a point of sale system. Is it through a virtual terminal on your computer? Is it through an invoicing software that we hook up with QuickBooks for you? It's how are you getting that product? There's really only two products. It's either you're processing a payment with a credit card or you're processing it through an electronic check through the bank. It's what's the vehicle that we're putting you, making that connection for you to those payment types.
Okay. So how are you assisting, if I'm a small business and I don't accept credit cards or I don't accept any kind of payment solutions, what does that look like? I mean, if I call you, what happens? I mean, what are you looking for?
Okay. Kind of the first thing we do is kind of a fact-finding mission. I know when you guys bring on a new client, you sit down with them and kind of go through the history and where they're at and how they got there. We do the same thing. What got you into the business? Why are you doing it? We want to work for them. So at that point, then we kind of figure out what's your customer base. How are people getting to you? Are they coming into your shop? Or are you a selling online type business where you've got a base of operations and you create a product but you're shipping it out? So that you don't have that interaction with the person face to face. So once we kind of figure that out, then we'll look at, what's your ticket size going to be? And when I say that, how big of a transaction are you going to do?
Okay.
Are you going to need more credit card or is it going to be more ACH? You get into, $2,000 and $3,000 type transactions, that's more than likely not going to be through an ACH. You get down on that $10, $20, $15 end, more people may want to pay with their checking account. So it really comes down to what are they selling? How are they selling it? What's the face-to-face interaction type times? And what would best fit for them at that point. Once we do that, then if they agree to engage with us, we go through what's called an underwriting process. It is a financial transaction. We do fall under the Know Your Customer rules and regs. Okay. So we do have to get data, when was the business created, what's physical address, how are you doing business, is it a face-to-face or is it online, because there's different regs for those. And then we get personal information to make sure that there's actually a person behind the business. You'd be very surprised, I use this as my story when I talk about that. In 2019, there was an office space, and people can't really tell, but we're in about a 10 by 10 built room here right now. There was an office space about this size in Boston that had 22 businesses registered to it. Well, what they were doing is it was laundering money. They were bringing cash over, going out and buying gift cards, the Visa gift cards, and running all of those all day long in that office. So when that happened, that kind of put that, hey, you got to know your customer. You got to see the building. You got to see where the business is transacting, so that it's not a money laundering or a fraud type situation. So once we get that, once they're approved for that, and then we've determined what kind of equipment is, then we follow up with the install, the training, and usually that's depending if it's terminal. Literally, we'll have it in there in about a week or so. If it's point of sale, that's going to be a little longer because we're going to have to help them build the inventories. Going to have to set those up how they want them. If it's a restaurant, there's modifiers, which are, if you go in and order a hamburger, do you want mustard, ketchup, pickle, onion, lettuce? It comes with all these. What don't you want on it? We set the systems up to be able to do that. So it's a little longer timeline. ACH, the same thing. We kind of set them up. And it really just depends, again, kind of goes back to that interaction on the front end and figuring out what's the best vehicle to get payments for them.
Right. Okay. So how does if you work with CPAs and other CPAs too, in addition to us, how can the CPA, the accounting firm, help you in the application process or getting started?
Okay. First off, the best thing is that introduction. You guys are a lot of times that front line on business is starting, because they come to you to get EIN set up, to get all their documents in place, being able to pay their taxes. So then it's like, oh gosh, I'm going to get paid. I've got to get money and, to have my business. How do I do it? So that introduction's great. Then the next step is just that, working with you guys on those tax ID numbers, what are their checking accounts? What ones are they using? Because some businesses will set up one checking account. Some will set up just a checking account for their credit card. They'll have one that's kind of their operating, and they bounce them back and forth. There are situations like if you work in Ohio and you happen to be a liquor store, you have to have a liquor account just for your credit cards.
Okay.
It's just the way the state is set up over there.
So, but obviously your business needs to be set up the right way initially before you can even think of accepting credit card transactions or other payment solutions, because if you're not set up the right way,
Right.
I think Jay and I've talked about this in the earlier episodes, you've got to be prepared, your financial records and your tax structure and status and everything to be ready to go.
And to your point on that brings up something that I didn't really think about, but on our application process, we take the EIN or the TIN and we put down what kind of structure it is. Mm-hmm. Well, then we do a check with the IRS.
Okay.
And if it doesn't match, we get a TIN mismatch. So name's not right. You guys know this better than I. The SS4 has a comma in it. Well, we don't put the comma in it. Well, the IRS says those don't match. Mm-hmm. So there's a lot of that with working with the accountant on that side and making sure that we get the proper titling and proper structuring when we're doing the application process.
Okay. So what are the advantages if I'm a cash-only client and I show up to you? Why would I want to accept credit cards or ACHs?
Okay. Again, it kind of goes back to what's your business model. I mean, what are you selling? If you're a hot dog stand on the side, you're probably okay not taking a credit card. Mm-hmm. But if you're doing a product that has a transaction at a couple $100s or more, not everybody carries cash nowadays. I mean, we're becoming a plastic society. So Social Security, all direct deposit now. Most payrolls, all direct deposit now. I can't remember the last time you saw somebody walk in with a paycheck and want to cash a check at the bank. It just doesn't happen anymore.
Right.
So the limitations of taking payments at that point is really why you start looking at that, especially at the larger ticket items. And I say that on the larger ticket items, that's not always true. I mean, everybody uses their debit card now.
Right.
Especially the more that we get into Apple Pay and Google Pay, and that's a cash transaction for somebody, but it's connected to their debit card. Now, if you don't take that, then you've lost a sale.
Right.
So it's really, it's a opportunity lost if you don't have it. The argument always is the fee, because credit card processing is not free.
Okay.
There are multiple fees in credit card processing. When I say that, I don't get all of those. Visa, MasterCard, Discover, American Express, they all have fees to process that transaction. The banks that issue the credit cards, they have fees. Those are called interchange rates. And just to give a little example on that, there are at this moment 751 different interchange rates based on card types.
Wow.
No, I do not have them all memorized. But kind of just to give you an example, debit cards are cheaper transactions than a corporate Visa. Debit cards transact at 0.0005% and 22 cents. A corporate Visa card can transact anywhere from 2.95 to 3.25% and a nickel. So what's that mean? So when you swipe the card, if it's a $100 transaction on a debit, it's going to cost you about 22.5 cents. If you do the upper end, and I'm kind of go in the middle just to make the math easy, at that 3%, it's going to cost you $3.05 on that $100 transaction. So that's the cost analysis side of whether to take credit cards or not.
Right.
There's other little fees in there too. I mean, the average retail place with a $50 type average ticket is probably going to pay about 2% to Visa, MasterCard, Discover, American Express, and the banks. Then there are the fees for the people that bring the processing to you. That's the back side. Kind of the front side is what you would pay us. There can be another 10 to 50 basis points and another 3 to 5 cents on a transaction. So you're somewhere in that 2.5% to 3% usually. Now, the prominent way of processing now is that business owner makes the decision to do what we call dual pricing. And Jay, you and I are closer in age than Chris and I are.
Yes.
So
Yes, you are. Thank
yes,
you.
I know. I knew he'd jab back at that. You've seen it. You'll remember it a little bit more. It was very prominent with gas stations that it used to
Yes.
be a cash and a credit price on gas.
Yes.
Yep.
That has always been available to the retail merchant, but it's not been prevalent. And part of that's been equipment. The software's not been there to do it. Now the software is there. So merchants can have that credit and
Yes.
cash price. So an item that's $100 would be $100 cash or $103 on the credit price. And what they're doing there is they're passing it on to the consumer.
Right.
But what it also does is it allows them to keep their cost down, because if you pay cash, you're not paying that extra. And it gives that merchant the ability to help relieve some of their expenses. I can give you an example of a large merchant that we have, and when I say large, I mean it's 45 locations. But by doing that, they were able to save almost $1 million a year
Oh, wow.
in credit card costs. So it's not a small number. It's a substantial number. Of course, the argument there is well, I'll lose merchants. Yeah, you will, but most you won't. And kind of where that comes in is, if you went in the store tomorrow and you were going in to buy a pair of Nikes, I mean, you've got in your head you're going to spend $100 and something on a pair of Nikes.
Right.
It's 101, 102, 104. You're probably not even going to
You're
blink.
not going to blink.
Right.
Yeah.
So
in the vein of these payment fees, from the business owner's standpoint, you're paying these fees on the transaction. So a card is swiped for $100. You're saying I'm going to get roughly a deposit net after fees. I'm going to get $97. Okay. Well, as the accountant, and Jay and I have talked about this, and different companies have done it differently. We see a lot of people use, or credit card companies, they either deposit the net amount of the $97, or they deposit the $100 and then take their fees later. I know your company has a certain set of that, but as accountants, Jay, and you want to hop in on this, I mean, that can be a struggle for the accountant.
It's not only a struggle for us, it can become confusing for the business owner, because if they do a $100 transaction and all at once they see $97.50 deposited into their account, they may not understand, especially if they are new to the credit card processing. And of course, as accountants, we certainly prefer the gross amount and then the fee pulled out as one time, because it does cause an accounting issue for us.
Yeah. So what's the trend in that with credit card processors?
it's actually trending more towards that what we call daily discount, where we deposit the net. Now, you can have them set up, and this kind of helps in what you were talking about, Jay. You can actually have it set up where it will deposit the 100 as a line item, and then have a line item also for the fee of that day. So it's all on the same
That's
day.
what I want.
That's what we prefer, yes.
And that's what we would prefer for our small businesses, just because it's easier to, if you have a $100 sale in your accounting records, it's much easier to match the $100 than it is to go, especially if you have multiple transactions in the day and they all add up. If you had $1,000 of sales in the day and they're 10 transactions varying between $50 and, $200, then trying to reconcile all of those to make sure I got my money and where the fees went. And,
and one of the nice things about the dual pricing is if you run a $100 transaction the way the software is now, it collects 103, but it deposits 100. And the 3 is escrowed by us, and we pay the fees. So you really don't see that fee come out. There's a one time a month $30, usually somewhere between $19 to $30, depending on who you're using. That's the service to be able to do that, where they're taking it and escrowing it and paying the fees for you. But it does help on the accounting side, because if they had $1,000 in sales that day, their deposit's $1,000.
Right.
And I say that it may be within a penny or two just because of the math where we're collecting the fee. It's not always exact. But if they did $1,000 in sales, it's going to be $999.59 or something like that's going to be their deposit. Right. So it does help you guys on that side.
Helps us, and also helps the business owner understand. They don't understand a lot of times if they're getting a net amount of what happened here.
Yeah, and kind of back to what you guys talked about, where it's nice for you, and I 100% agree on the accounting side, that you have the one-time fee. Tough on a business owner, especially starting up, if they've done $10,000 in sales and they think it's great. They hit that first week of the next month when a $300 fee hit, and they're like, whoa,
where'd that come from?
Wait a minute. I've got to make payroll. I've got to buy inventory. So the daily discount is really a nice cash flow helper on us. And it really, where that hits are restaurants, convenience stores, gas stations, those kind of places, because they have usually weekly vendor that have to be cash payments. They have to write a check to their beer distributor or they don't get their beer. They have to write a check to their cigarette distributor or they don't get their product. So that not having that big hit that first week is really big for them, because, especially if it's an established and they're doing, $100,000 a month in processing, $3,000 coming out at the first of the month when they've got a payroll, a beer check, a cigarette tax, all those things hitting at one time.
Yeah. So if I'm a new merchant or a new client, and I start making sales, obviously with cash and check, I got my money same day. I mean, I can go straight to the bank that day. I can make payroll the next day or same day if I have to. So what's the time lag? What happens there?
Excuse me. 95% of the time it's next day.
Okay.
So most processors, if you close out or batch sometime around 8 to 9 o'clock in the evening, your deposit's there next day.
Okay.
If it's after that, it will be the following day. And the way that works is the cycle is, 9:01 p.m. to 8:59 p.m. in a day. That's their 24-hour window.
Okay.
So where we try to help with that is making sure they understand after that first day, you're always going to have deposits, but it's that first one that you're going to miss.
Yeah.
Now, there is now same-day funding. Quite a few processors, and ours have it. It's just an extra expense, but it's one of those, depending on your business and how you need your cash, is it worth that expense? And it could be somewhere, the low end's around the 1% to 3% of what the deposit is to get it. I kind of laughingly say it's a same-day loan. And you're 1 to 3% your interest rate.
Well, that's effectively what it is.
Yeah,
I mean, it's kind of like the same day refunds getting in these national tax prep firms where you go get same day refund. It's just a loan.
Yep.
You didn't really get your refund that fast.
No, they gave you a loan.
You've paid for it. Trust me.
Exactly.
Read the fine print. You paid for it.
Now, in talking about the accepting credit cards, and maybe for businesses that are just getting started into it, I'm guessing all credit cards are not equal. and there's different things to deal with. An example I'll give is I have a credit card that I like to use a lot because I get some perks, but it's not accepted everywhere.
That is true. And that's really on our side, on the setup side. In the conversation that we have with the business, we talk with them about, do you want to accept really American Express or Discover? Visa and MasterCard kind of come as a package. You add Discover and you add American Express. Historically, American Express was much more expensive for merchants to take. And when I say much more expensive, they were in the 4 to 5%. The American Express kind of figured it out, and they've brought that back in line. They're back in line with a higher end rewards card. And I kind of going to backtrack and mention in those interchange rates that I talked about, rewards cards are more expensive for a merchant to take. Visa, MasterCard, Discover, American Express don't just out of the goodness of their heart give us flight miles or cash back or anything like that.
Right.
They charge the merchant more to take that card.
Yes.
So the merchant is actually paying your reward. So we have that discussion kind of on the front end.
Yes.
At this point, we've really yet to find a spot where they shouldn't take all cards. Doesn't mean they have to take an American Express. Set it up such that they can.
Right.
But I have probably the same. It's either a Hilton or a Marriott card, or you get your points, that kind of same thing. It is more expensive for that merchant.
And I have noticed that it is coming more into line that more and more merchants are accepting my card.
And that's where American Express went to a program called OptBlue. It's probably getting on 10 or 12 years now. And that's when they kind of realized, hey, we saw it. We were the card because everybody had the card because, every commercial you watched on TV showed all the stars having the American Express. So everybody got one. Well, then when merchants stopped taking them, kind of fell off.
Yes.
They kind of figured out why, is they were charging the merchants way too much. So merchants just decided not to take them. So then it's kind of turned it back up.
Yeah. So as a new business owner, or when you set up your business, it's not long after you register a business, you start getting all kinds of junk mail. I assume they get all your information from your Secretary of State. Wherever they get your information, they somehow find you.
Yep.
They find you fast and quick. And there's credit card companies out there like Square, PayPal, Stripe. I'm sure there's others. What's your thoughts if I'm a new business? Is it better to call one of those guys or call somebody like you or another national credit card company? What's your thoughts?
Well, naturally, it's me. Call me. Right. Anybody call me.
Yeah.
No. Let me explain what a PayPal, a Stripe, and a Square are in our world. They're what's called a PayFact. And what that is they are an entity that assumes the risk without underwriting.
Okay.
That's why you can just jump online, put about 4 pieces of information, and have a Square account and start taking cards. They've based that model on the fact, kind of like an insurance company, they're hoping to be so big that if 3 or 4 have bad credit issues, they'll just absorb it.
Okay.
Now, what comes with that is the fact that you get no support on that side if you do have a bad fraud issue or a bad chargeback, because they just lumped everybody together and it's okay, no big deal. The difference on when you go through underwriting is we actually have industry codes that we put you in. If you're a restaurant, a bar, a tobacco shop, a liquor store. And those have all been vetted over time, much the same way insurance companies do, as to what's the risk, what's the fraud risk, what's your chargeback risk, and they're set up to help you on that. So business owners aren't thinking of that when they're going through trying to get their taxes set up, trying to figure out what inventory, what to sell. Marketing is a grill in the room, and that's where the PayPals, the Squares, and Stripe come in. The other side that's different on them is they charge a flat rate plus percentage, no matter what card it is.
Okay.
So if you're a business that takes a lot of debit cards, you're way overpaying on a Stripe, a Square, or a PayPal. If you're one that takes some of the upper ends, you're probably okay. But in general, you're probably overpaying. I will say right off the get-go, Square has good equipment. They're simple to use, easy to set up, good to get started with. Support's awful. They are a outsourced service center, and it is what it is. We all deal with them. They don't really want to. I don't want to say they don't want to keep you, but they don't care if they keep you happy. I guess that's the best way to say it.
Well, they have a big enough market share that if they lose, lose a couple every day.
It's okay. Big deal. Exactly. Yeah. So ideally, the better thing to do is find somebody local. One of the things that we really pride ourselves on is that service side. Our cell phone is on our card. If I give you a card, that's my cell phone. If you call me at 11:30 at night, I will answer the phone. I've ran to Beckley, West Virginia at 10 o'clock at night because we had a merchant down and we had to get it fixed. So you're not going to get that from Square.
Right.
Plus, they're just notoriously, and it's happening over and over and over. Square is owned by a company called Block. That's the publicly traded company. They are a reporting traded stock. So they're worried about revenue.
Right.
They've increased their fee 3 times in the last 5 years because they've not hit earning numbers, and Wall Street's not liked it. So when you're at a mercy like that, you can see where just getting something off the internet's not necessarily the greatest thing to do.
Right. All right. Well, if you guys don't have anything else, I think we've done a pretty good job at this. And Dwane, we really appreciate you coming in. I think I've already said that, but we really do.
Yes, we do.
And if you want to get a hold of Dwane, his information will be in the show notes, how to get a hold of him. We'll have all of that linked there. Obviously, if you want to talk to me or Jay, our information, again, is in the show notes, and you can find us through all the proper channels there to give us a call. But other than that, we'll see you on the next Accounting for You podcast. Thank you for taking time today to listen to our podcast. We appreciate listeners like you and ask that if you enjoy what you hear, please like and subscribe to our channel to ensure you receive the latest episodes as soon as they come out. If you have any questions about the topic we discussed today or would like more information on becoming a client, please do not hesitate to contact our office by visiting arcpas.com or theaccountingpodcast.com.